Welcome to the Kendall Report. As we come into the final 2 days of the week, we're likely to see a fair amount of action around the markets, especially due to the claims numbers coming out today, as well as the continuing claims. And on top of that, we have 534 earnings reports. But taking a quick look back at yesterday, it was basically a flat day. We did see some reasonable strength for most of the session, and it faded into the close. I think that was some profit taking ahead of these numbers that are coming out on Thursday and Friday. Markets are likely to stay in this sideways choppy range that I've been talking about all week. But we looked at yesterday, S&P was up 0.1, NASDAQ down 0.4, and the Russell down 0.3. So it's basically a nothing day. There was no real volatility to speak of, although we did see, as I mentioned, some strength early in the session. But one of the big stories yesterday was the energy sector was up 3.3%, materials up 1.3%, and the financials were up 0.9%. So there was a pretty decent bid in some of these sectors yesterday, which tells you there's still a rotation going on. Also had the ADP numbers come out. They came in at 742, a little bit under what they were expected to come in at. Most folks were looking at 800 to 850,000, and that really has no correlation to the employment numbers that will come out Friday. Sometimes they're leading, but most of the time there's very little correlation to those numbers. As I've talked about before, the claims numbers and the continuing claims are important. We're looking at 535,000 new claims coming out. That's down about 200,000 from just about 3 weeks ago. And the continuing claims came in at 3.66 million. I'm still looking for a number that's going to tell me that it's material, that something good is going on, will be for that number to drop under 3.2 million. So far, we've seen very little movement. I believe for the last 3 weeks, it's been right between 3.5 and 3.7. It's just been waffling in there, a little bit up, a little down. So I think that's starting to stabilize. One of the things that continues to happen around the markets is both the Fed and the Treasury are jawboning the markets and trying to convince all of us that inflation is not real, it's transitory, it's temporary, and it's going to go away. Yellen was saying it yesterday. One of the Fed presidents was out talking yesterday as well, and he's saying the same thing, and they're just doing everything they can to try to keep psychology in place. And meanwhile, we didn't see a lot of activity in the 10-year. And if you watched the live stream that I did yesterday, you know that I discussed the possibility for the 10-year to come back in maybe about 10 basis points into about 1.45, as low as 1.42 in this pattern. That is likely to be a positive event. In spite of all the inflation expectations, maybe their jawboning will start to convince folks that everything's okay. Down the road, as I've talked about, as we come into the end of third quarter, into the fourth quarter, we're likely to see these numbers shift into a more aggressive environment, meaning that inflation will become more real as we come into the end of the year. It's going to be hard to deny that it's going on. There's not a lot of activity overnight. We're saying the futures remain flat. The volume's reasonable, but they've just been changing hands. Nobody's really making any aggressive moves up or down as far as the futures activity overnight goes. I'll go through all the details here in a minute, but we are seeing a continuation of some liquidation in our short-term models, and they're starting to move back down below that 58% number, and that is not too concerning yet. So let's go ahead and take a look at the charts, see how they're set up for Thursday. As I begin with the review of the WaveTech Database, as I mentioned in the opening comments, we did see a fair amount of selling coming in. We had 1,464 sell signals and 322 buy signals between the two models. It moved the percent bullish down to 56.98. So we're continuing to see some of that liquidation. It's going to be interesting over the next couple of days to see if this will stabilize. I've mentioned in the last couple of videos that getting under this 58 level would suggest that we would drop down to possibly 52% bullish. So I expect to stay above that level over the next several days. If we do see some positive days over the next two sessions, we should see this traction start to come in. what's really happening on the database is we're still seeing a very high level rotation. There's 9,172 symbols long, and that number's been around that level for the past week or so. But what I'm expecting to see happen is it go to the next level and get traction above the 62% level and start to see it build more. That's when we'll start to see the market actually expand. Now, one of the things I did not mention in the opening comments is there is 534 earnings reports coming out. What's interesting about the earnings reports today is that they're all mid-cap to small-cap stocks coming out. And this could be enough to start maybe a positive rotation into the small caps, or possibly get some more traction in the database depending on and how the markets respond to them. As I begin a review of the S&P 500, the futures are up 225 points, 4162.25. PPM1 is starting to turn up, so this is encouraging, but we continued the trade between that 10 and 21 period moving averages. The 21 period moving average 4154.44, and the low has been 4151.50, so we traded just below it and currently trading at the 4162 level. The 10 period moving average 4175 is likely to be continued resistance as we just move sideways in this pattern. It's been very frustrating over the past several days. We've seen a slight downward bias for a few days and then absolutely sideways. And on a week-to-week basis, we've actually been between 4184 and 4170 for the past 4 weeks. It's been very flat, even though we've seen a couple rallies up to print a new high during that period of time. The weekly closes continue to be very stable. But it is encouraging that PPM1 is starting to turn up. It will take a close over 4175 to trigger the market into higher levels. As we look at the market grid for today, the expectation will be, which has already been printed, S1 4151, which is the low for the night, to 4179 on the upside should be the number. It's possible to print up toward the R3 number today, but we should have a fairly tight range. As we look at the SPX, as I mentioned, there was a cycle came in yesterday. My expectation is that it will be a low, so it will be critical that we remain above yesterday's low on the cash at 4160. If we do that and close above the 4179 level on the cash, that should set the tone for some strength as we come into Friday. But the PPMs are still in a very neutral position. They're not indicating downward pressure or upward pressure. It's total neutral at this point in time. Next market I'll cover is NASDAQ. NASDAQ continues to hover right along the 40-day moving average, 13,484, the low 13,451. So we've been just below that. As we look at the market grid for today, 13,428 is S1. R1, 13,553. So we're trading between an S1, R1. My expectation, just like with the S&P, is for an S1, R2 level today. We should see the market move back toward the 21 and 10-day moving averages up around the 13,800 level. I don't really see any huge downward risk. The extreme for today that would be likely if we did get through S1 would be a move down to just S2. I don't see a further decline from there. PPM1 is starting to turn up, so we're starting to see some signs that the market's starting to stabilize. The final market that I'll cover tonight is gold. Gold is continuing to try to move higher. We were able to close back above the 10-period moving average, 1779. As we look at the market grid for today, 1798 is R2. If we get above that level, then we could see an R3 possibility of going to an RXT number. I do believe this market is about to accelerate to the upside. You see that PPM1 is turning up. PPM2 is about to break through both its first and second derivative, and PPM3 has a nice upward slope, suggesting that this trend is going to accelerate from here. This will complete the video for tonight. Thanks for watching. Don't forget to watch the rebroadcast of yesterday's live stream for more details. Thanks again for watching. Hi, my name is Bob Kendall. You know me from the Kendall Report. I help you manage your portfolios and protect your wealth. The way that I do that is through our software platform, Portfolio Expert. This platform is amazing. It covers over 16,400 symbols. You can build as many portfolios as you want to manage and to protect your wealth. What you'll find by setting up a trial of our software is that we're going to train and walk you through every step to become what we refer to as an ETF hacker. We're going to show you how to take your favorite ETF and make it something really special, and it's owned by you. We also call this building your own personal funds. And what that means is you're going to build your own personal mutual fund. It is all yours. You can pick the stocks, and the software will walk you from A to Z, telling you when to buy and sell, how much to buy and sell, including helping you to protect your capital through the signals that when the market rolls over will get you to cash and out of harm's way. It's very simple from here. It's just sign up, click the link down below. We'll get you in our system. As soon as you get in there, we will notify you of a live webinar to walk you through every step so you understand exactly how to use this product and how to manage your portfolios and protect your wealth. Sign up now, just click the link below.